What's up, everybody? Welcome to the Bootleg Weekly. I'm going live just to show you all that Roy is late so we can publicly ridicule him whenever he does join. And I hope he joins. I hope he's not just skipping on the show. We have a bunch of stuff to chat about. We're going to talk about some earnings. That's going to be fun. There's a bunch of news. I want to talk about Lemonade. I'm going to be making a video about Lemonade eventually, maybe right after this live stream, actually. I'm going to be covering their earnings. And yeah, it should be a fun stream. We covered HIM's earnings yesterday. That was fun. That turned green intraday today. And then it gave up all of those gains and it turned back into the red. Where is Roy is the question I am also asking myself, Nate. I don't know where Roy is. So we'll see if Roy decides to join. He's probably pulling a Tanner. Yeah, HIMS was a really fun earnings. I've also been taking a look at a bunch of other names as well. UNH, I am probably going to size my position smaller and then go into Amazon with the money that I would have gone into UNH with. So going to go heavier into Amazon, less heavy into UNH, and that's just a matter of risk adjustment. How am I? I am doing well. I just had a full work day and I finally get to hang out here. I have been, yes, thank you for noticing, June, appreciate you. I did not have a haircut. I just shaved. So thank you. Yeah, I have no idea where Roy is, guys. Roy is MIA. Yeah, he didn't even message in the group or anything. You're MIA, sir. I just messaged him on X, so let's see if he actually responds. But yeah, I get to hang out with you folks for the time being, because I'm sure he will join eventually. And if he doesn't, then I can just talk about the earnings. That could be fun too. One thing that I am looking for is I'm actually looking at Duolingo a little bit. I think that's going to be a fun one for this week. I made a post about it last night. And just simply talking about how it's been sort of oversold. I know Chris, Data Driven Investing, has been big into Duolingo. He's actually one of the ones who got me initially thinking about HIMS as well. So I trust a lot of his picks. And I was looking at their financials last night as well. And they report earnings tomorrow. So we have to take a look at, what their numbers are actually going to turn out to be, because a lot of people are protesting them because they're essentially moving in this AI first direction and away from people, which should signal some operating leverage for that business, but it's still not the message that people want to see. So they've been seeing a lot of boycotts on social media. And I want to see to the degree to which they're impacted in their financials. So we're going to see on Thursday, but if in fact they are impacted on their financials quite a bit, then that might be an interesting one to start a position, right? Because if you look at Duolingo, that one was like in the mid 500s where it peaked, and now it's at 340. So it's dropped a good like 30-40% essentially from the highs. And yeah, that might be really interesting to take a look at. Yeah, he is actually mildly worrying me right now because he's 4 minutes late. First time I see Tevis, I'm just a dude on the internet. I appreciate you. I'm just a guy who talks about stocks. And yeah, so that's my Duolingo play. We won't tell Roy because he's late. So whenever he does join, we'll just save that one to ourselves. Let's see. This morning I closed HIMS covered calls, sold $295 covered calls for $63 strike when we reached 62, and it closed it again with dip to 57. Yeah, I think Nate also had a play like that. I closed my HIMS $105 covered calls, which is honestly free money, and I'm going to be closing my $40 puts as well, simply because I want to turn over that money and I don't want to wait until September 19th. I closed my 55s and I closed my 45s, and the 40s are the only ones that's left. Yeah, exactly. Even Tanner is here before Roy. This is, quite frankly, kind of embarrassing, honestly. So, but yeah, with HIMS, I just want to make sure that I can free up some of that capital. Amazon is kind of unfairly beaten down, in my opinion. I don't think it should be down to 214 or 215 or wherever it was trading today. But I'll happily take advantage of that through some cash secured puts. And then I also want to see what else falls. I have a small Nebius position. And if Nebius gets hit tomorrow when they report earnings, then I could see myself going into that heavier as well. Lemonade, what a beautiful, beautiful name. Yes, I didn't read this comment before I put up on screen. Palantir is just bananas. I'm sure Roy is going to talk about it when he gets here. But Nebius was another one that I could see myself getting into. And we'll see if it does sell off. So without further ado, the man of the hour. Hey, Roy.
Hey, sorry for being late, Tevis and everybody else. Not sure why my internet chose to go down at that moment, but I am using my hotspot. So if I suddenly go offline, I guess I'm out of data or something. I don't know. I rarely use my hotspot. I think it's unlimited, but.
Hey man, you guys were giving us crap for Canadian internet last time, so it happens to everybody.
Yeah, it's probably my router. The problem is it's in a room that I can't get into right now. My oldest son, he's in there, he's sleeping, and I'm like, do I want to wake him up? And like, I don't know, it's fiber, it's supposed to be super fast. I'm like, whatever, hotspot time. So I gave up. Yeah, so I'm here. Yeah, it's probably pretty bad quality, so I apologize.
It's not the greatest quality, but I appreciate your rationale for not wanting to wake your kid. That's very sweet.
Yeah, he works nights, so it's like, yeah.
That's fair. Is this the one that worked at Chipotle for a while? Yep.
And I'm spinning. Can you still hear me?
Oh my God. This is going to be one of those streams, boys. Yeah, this is just going to be one of those streams.
I'll try in like 10 minutes switching back over to the regular internet, but cool. Can you hear me at least?
We can now. Yeah. You're fine now. You cut out there for a second, but it's all right. How's it going, Roy? Yeah, with all that money, with all that Palantir money, you better get yourself some tech.
I mean, like, I don't know what I have to do. Buy an internet service provider or something. Like, we pay for actually the best internet, like we do. So it's fiber. It's super fast, reliable. It never goes down, except for like planned maintenance. And this is not planned maintenance, so it's probably my router. So we'll have to see.
I think you're fine now. It's coming through okay. We have some earnings to talk about. I just told the audience about my my Duolingo and the Nebius that I'm looking forward to, both of which report tomorrow. So that's going to be fun. We'll see. Both of them are going to be like a very small position, if that at all. But right now, I'm mainly just living my best life, selling HIMS covered calls and Amazon cash secured puts.
Oh, so you did cash secured puts on Amazon, not HIMS? I guess you already have HIMS, so.
No, I'm closing off my cash secured puts on HIMS simply because, I mean, like I opened them in July, or no, end of June for September 19th. And so now they're like 70, 80% in the profit. So I'm just closing them all off because there's not even that much left on them for me to wait another, month, over a month. So yeah.
So are you going to re-up then?
No, I think HIMS for me, as I mentioned, yesterday and also in a separate video on TikTok, actually, I said it's just moved from, a buy to a hold for me. And the earnings were okay. I didn't expect them to not beat on their numbers, I'm mildly concerned about the acceleration into the end of the year that they need to hit their, guidance. And as a result of that, I think it's going to be a hold for me because like their growth rate is not, going to be as strong as it once was. I think Manuel brought up a great point yesterday with regards to him. So he said, look, the company is forecasting 60 or 58% to 63% full year-over-year growth, but their year-over-year growth over the first couple of quarters is like it's going to be front loaded, and so like their next couple of quarters are going to be even lower from a comparable point of view. And I think a lot of companies are going to have that problem with tough comps. And then if you look at the guidance that they gave, they reiterated that guidance while baking in the $50 million that they're expecting for Zava until the end of the year. And I'm like, well, like if you didn't have Zava, were you going to lower that guidance? And so that's the stuff that's making me a little bit concerned because they're making all of these investments into the growth. And we're seeing that the growth isn't as strong as we thought it was. I think Q2 was like a breakout blockbuster quarter or Q1, I mean, was a breakout blockbuster quarter for them. And then I think, I'm not super confident until the end of the year unless testosterone launches and like goes like gangbusters,
Yeah, I wouldn't expect that either. I do think that there's a lot of growth verticals a little bit further out than this year. So quarter one, quarter two, especially as they scale into Canada and they're able to offer. That's not going to be as high a margin as they appreciated but usually with new products, you need a little bit of time for that to ramp up. So testosterone is going to certainly be a big player there. I think, it's interesting what they talked about as far as the wearables and as far as the in-home test, what they're doing on the back end that Mo talked about, Elishwani, it's interesting. I need to think a little bit more about it, but I agree with you. Like this was a quarter that was the worst quarter that I've been paying attention to HIMSS in. Now it wasn't bad. A lot of companies would still take it. Wasn't atrocious by any means. And I actually kind of liked it a little bit because the main reason why I liked it is I actually think it decreases the main bear case, which is the lawsuit from Novo Nordisk. Now they could still get sued, and people get sued for any time, any reason. But
well, on that, have you seen what news dropped today, Roy?
Maybe I'm missing something.
Well, let's go through it. First of all, thank you, Charlie, for the $1.99. Thoughts on HIMSS and Nebius, hold, buy, sell. I think HIMSS is a hold and Nebius, I mean, I have a starter position, but I want to wait until the earnings tomorrow just to confirm it. If I get it higher, then I get it higher. If it goes lower, then we'll see what the earnings show us. But HIMSS is definitely
While you're pulling that up, guys, as a reminder, if you're new here or if it's been a little while, thank you for joining us today. We'll have about an hour where we talk about the main topics. We'll tend to hit questions and answers that relate to the main topics, and then we'll have a Q&A period. If my internet holds out, that's rapid fire towards the end. So you can put your questions at any point. Tevis will tag some of these. I'm probably not going to share my screen at all, given my potato hotspot internet right now.
Yeah. And if you donate $1, I'll read your question immediately. All right, here we are. So 4 hours ago, Novo filed 14 new lawsuits over compounded semaglutide, brings total to 130 lawsuits across 40 states. This is also the reason why I don't think you saw it on the stock chart, but I can point exactly when this news came out because you had just a massive dip in HIMSS. And here HIMSS House released the full list of companies, the 14 companies that were named in this lawsuit. And you will be pleased to know, Roy, that HIMSS was not listed among these 14. However, we do know Novo is out on the warpath. We know that they're suing companies and that they're taking action. So here we have the dip is where it happened. This is when the news, came out. And then when it bounced back a little bit was probably when the list came out that HIMSS was not on it. Just before the end of the day is when this news broke.
Yeah, that's really cool, dude. I missed that. It was a busy day at work. I caught some headlines, but that's one I didn't see. So thank you. That's amazing. Honestly, that was what stood out to me as the highlight of the quarter, is like how they is a miss. You can't sugarcoat it. A miss on revenue, not for their own guidance, but analyst expectations. And technically a miss in guidance just because Zava, you mentioned, adding 50 million, and yet they stood pat on guidance. And I liked the way that they handled the 503A questions, because I'm like, okay, this, at least in my mind, I was thinking it was, if they blew it out of the water in revenue, then likely that's going to show up in the 10Q. And looking at the 10Q, we remember last night we looked at actually a deceleration, which you would expect to see quarter over quarter in GLP-1, relative to top line revenue growth, but also overall deceleration. And they mentioned that was some of the headwinds that they were facing beyond just revenue, just offboarding some of those clients as well. Now we don't know, because they kind of dodged the 503A exception, but I think that between the actual results that they had, between some of the comments that we got from that article with the CEO a couple months ago with, I don't know if it was Washington Post, I can't remember which article, but maybe it's Business Insider, but whatever it was, coupling those things, I was like, okay, Novo, looking at this, I don't think that they're going to sue. And so while I didn't rush to buy the dip, I did sell some cash secured puts in HIMS, which would effectively double my position if we go below 50. So I wasn't exactly cautious as we opened up in the market. I'm like, if it goes below 50, fine, I'll own more HIMS here. That said, there are tough spots and rough spots in the quarter, but that biggest piece, and I think that this headline kind of shows it, like Novo has nothing. It doesn't mean that they can't sue or won't sue HIMS, but with that headline, I mean, I would say it's very unlikely. And so what's happening with Novo too, and maybe we can talk about this too, they suck. they have, as a management team, in terms of execution, they have underachieving. That's one of the reasons why the CEO is out. That's one of the reasons why they have a lot of shakeup with some of their business stuff. And they are, and I've shared this before, they're like a wounded animal. And that's when it's most dangerous, because they don't always act rationally. So that's why I actually thought, if they show any kind of a beat and they show acceleration in that business, they're getting sued like 100%. And I think they would have. I actually think, Tevis, that the maybe not, but what do you think about this? I think that the reason why this today is they were specifically waiting for that 10Q filing for the SEC so they could see the breakdown of that and see if things were not the way that they should be. And then they left HIMS off the list as a result. I could be wrong, but I'm guessing that they had everything drawn up and ready. Probably HIMS is on there like, you know what, let's take this off. This one doesn't make sense.
So I think that's the $1 million question, is why was HIMS off that list? Because they are the most public, disabandonment, that dissolution of that partnership. I agree with what you're saying, back a dog against the corner and don't be surprised if it bites. I agree with that whole mentality that Novo was going to start throwing around lawsuits if they were acting irrationally. I still don't agree that the lawsuit is the best path for them to go, because they are a multi-$100 billion company and they're suing companies that I've never even heard of. The big question is, why is HIMS not on that list? And is that a temporary thing? Or, like, I think Nate commented, he said, maybe they're just trying to get easy wins with these little companies that don't have a lot of resources. And then they want to compound that into a bigger lawsuit with HIMS later on down the line. I'm not sure what the reason is, but I think this increases the risk of HIMS being on a lawsuit, because they're showing that they're not afraid to pursue that lawsuit path, and it's only a matter of time before HIMS' name shows up. I mean, 190 lawsuits across 40 states, 130 lawsuits across 40 states is definitely nothing to sneeze at, right? Like, they're taking it seriously.
Yeah, I don't know. We'll have to see, but I'm on the other side of that. I think that the lawsuit risk actually goes down. I'll need to actually read the legal filing. I'll read the statement and everything. Like, the comments that they had on the breakup from HIMS was, very telling. But I mean, so to Nate's comment, so I want to take it a little bit less seriously because you're on Tevis's channel, not mine. But no, I'm just kidding. Love you, Nate, and Tevis. But Hims is not that big of a company. It's not. I know that there's some of these, I'm sure, are very, very tiny and small, but compared and relative to the size of Novo Nordisk, especially that legal team, they are a tiny, tiny player still. And it's hard for us as Hims investors to think of it, especially market cap and everything. But you look at the revenue that they're doing, you look at the number of employees and that count, you look at the size of its actual business, and it's not in its infancy anymore, but this is like the toddler stage. So they are almost as vulnerable and weak as the others. Now, I do think that, I don't know, the timing is very interesting. We'll have to see, but
so
I don't know.
Go ahead.
I think the biggest issue with Novo Nordisk is Eli Lilly. Eli Lilly has better GLP-1 products. They already had it better, and they're also coming out with additional new oral GLP-1 products, which are immense. And that's a huge, huge tailwind for them. They're much better managed. They have a lot better product suite. They don't do stupid things like, oh, we won't pay $400 or $250 and then the penalty and let our and fail to protect our patents. That never would happen to Eli Lilly. And I'm actually a little bit interested, even though I don't really like big pharma a lot. They're not bad. They're not evil necessarily. They're there to make money, and that creates new drugs and stuff. But Eli Lilly is looking a little bit attractive to me. Maybe it's just me. Novo Nordisk, though, like people were asking me about this, like shortly after their massive earnings drop a couple weeks ago. Like, I wouldn't touch it. I think that the dip can get dippier, and this is a wounded animal lashing out. You guys might be right that they're going after like the weakest prey right now, but I don't know. I don't know that they have teeth.
Yeah. And I'll repeat what I said yesterday with regards to Hims, that granted I did buy shares today. So
DJN, just kidding. It's
so. Exactly. But so I think my mentality has changed somewhat on Hims if I'm ranking them in that hold bucket as opposed to that strong buy. Like I was saying yesterday, I think a strong buy for me, I would be buying leaps, I would be buying short-term calls, I would be buying shares. I would not be selling covered calls, and I would be selling aggressive, like in the money cash secured puts, because I want to get my hands on as many shares as I can in whatever way I can. But here in the hold category, why did I buy shares? Because I plan on closing some of my leaps. And so I want to supplement that with some shares that I'm going to sell covered calls against. And if they get called away, they get called away at some volatile period. Do I still think that Hims is going to go to all-time highs this year? Yeah, probably, if they continue the execution with the market where it is, and if we get rate cuts in September, of course. But the point is, if you're looking at the business from a fundamental perspective, the risks right now are not screaming buy to me, because you still have this dark cloud of a lawsuit risk looming over them, especially now that Novo has proven that they can follow through on those lawsuits, and Hims is probably going to be at some earlier date, in the near future. That with those fundamentals, if the company is not growing at those amazing growth rates that they had before, and if they're actually struggling to grow, and if there's trade-offs that will lead to further growth, and if we're delaying some further growth, for next year, so to speak, and if they're not absolutely triple beating all of their numbers consistently, then you have to ask yourself, well, why am I taking on that outsized risk for that lawsuit? Like if this was a company where every single, like SoFi, for example, right? And I know Hims has much higher growth rates, but they're also a smaller company. But like Hims missed a revenue guidance number. And I'm like, oh, wow, wait a minute. That sort of shattered my, like, this pedestal that I put them on. And
wait. Did they miss their own guidance?
Yeah, they missed the revenue.
Well, they missed analyst expectations.
They came in, I think, at the mid range of their number, or maybe slightly towards the top range of their number, but they missed analyst expectations.
Which I mean, like, it's still a miss, but it's a very different thing in my mind.
And they beat their midline.
Yeah, it's a very different thing in my mind when you not only miss analyst expectations, but you miss your own guidance. So for me, like, this miss wasn't like a huge deal. Now the slowdown in the core revenue, that was a concern of mine. But yeah, that miss, like, they guided correctly. They're not misleading us, and so that helps me trust that reaffirmation of the guidance. I know Zava 50 million. It also they kind of reiterated the 2030 guidance as well.
Yeah, and like I think if it's a company that's in my top 3, or if it's a company that I think is still a great company, like I'm going to give them plenty of quarters to prove me wrong. I think before I cut and granted my Tesla position, I still hold 6 or 7% of my portfolio in Tesla, but it took me like 4 or 5 quarters of consistently missing numbers for me to be like, you know what, I don't really want to be holding this in this large degree. And so I think that's starting to sink in for me for HIMS as well, to not say I want to cut my shares, but also not say like, hey, I want to keep 4% of my entire portfolio in leaps in this company. Like I think that's a little bit aggressive. So I got to size according to my confidence.
Yeah, yeah, and yeah, like that's the thing is options are inherently risky because you don't control time and you never know like what the market's going to do. It's great when things are really, really compressed, but that's not HIMS right now. HIMS to me is in fair value territory. It's not cheap. It's not expensive. It's just fair. And so for myself, I don't take on leverage in the form of margin, not margin. I don't do margin in the form of options when it's fair value. So for you, like it makes sense to unlever some of that in terms of the options because shares, I mean, you can always sell covered calls against it, make some premium.
Exactly.
It can sit there, trade in between a 35 and 65 range, and it's like, hey, it's fine. So yeah, that's why I sold cash secured puts is like that's the opposite is like if it gets to $50 a share, that's still in my fair value range. It's not cheap. I think 49.50 is actually what I sold at just because the way options pinning can work on a Friday, especially after a big earnings. But I'll probably keep selling unless I see something more attractive. I did sell some cash secured puts on Shift 4 because it actually had a double miss, but they raised their guidance, and it's already a very bullish guidance. So I'm like, all right, it's just one quarter, great management team, great company. It was a single put, so it's like $8,000. It's not,
Yeah. Well, I mean, look, I think the relative strength in the stock price over the short term, I was shocked that it even went green in the first place. Like I was just shocked because I didn't think it would, go green. And then obviously it gave it all back. But I think that was really interesting to me because it signals some short term, like all of those people who had sell orders basically got triggered all on the way up, right? So it did give you an escape valve if you wanted to sell after that earnings. If you're like, oh my God, I want to get out of this position. It's like, well, great. You can do it at a higher price than you could have done it before earnings.
Yeah. And I was wondering about that. I did see that big spike up and I was like, I didn't have time at that moment in the day to like even look. I'm like, are there headlines? And I didn't see anything that stood out. So I went back to work. I was kind of wondering if that was shorts actually covering just because I've talked to or I've seen what others have posted as well that are short in HIMS. And the largest saying for them was that lawsuit risk. And I think that they saw what I saw, that when they looked at those earnings, they're like, okay, yeah, it's a miss. No way to sugarcoat that. But if their thesis is lawsuit, I think that got a lot weaker. Now, maybe there's a mixed opinion. I think that that's fair on whether or not the lawsuit risk goes up with Novo, what they did with all these other weaker companies. But the actual earnings themselves, that decreased, I think, the possibility of a lawsuit.
That's interesting because the thesis there is that the earnings, having been a triple B smashing success of a quarter, would have provoked Novo into straight up going into a lawsuit as a way to save face. And because it wasn't as strong, you're arguing it lowers the risk of a lawsuit.
Yeah. Yeah. I mean, like you can see right there in the 10Q, the breakdown of the GLP-1 revenue. Some of that still in the second quarter is from the shortage list, not the shortage list for the 503B exception, the broadband. But that went away in May. So a lot of that revenue is probably that, but there's some 503A. And if you saw that increase quarter over quarter, that's a lawsuit right there. If you saw them smash revenue on the top side, that's a lawsuit right there. Instead, you saw the opposite. And you also saw the way they guided, the way they commented on this. And I'm like, dude, they're probably not getting sued. Now, again, and I could sue Tevis for breaking into my house. Never happened. We've never met each other in real life yet.
You could
I
shoot
could
me
do it.
for that.
Anybody can sue anybody for anything. It doesn't mean that you're going to win. So, that's the other thing too, is like, I've been waiting. And if they were sued by Novo Nordisk, then today I might have, instead of selling cash liquid puts, I might have just bought shares, depending on what that dip looked like. Like, so if for instance, like we got the earnings results the way they were, and for whatever reason, Hims was named in that lawsuit from Novo Nordisk, we'd probably be looking at 45, maybe $40 a share, maybe 35. If we were at $35 a share, I would take a stab. I would double my position here.
Yeah. Yeah. I mean, at that point, you're getting odds, because fundamentally what you're doing is you're betting on management's ability to execute in the face of uncertainty, right? Like, it's like, oh, Tesla at 200. Yeah, sure. I'll gamble, in the sense that you're getting odds for that, right? Like, you're getting a multiple off of your money because the valuation is so low, and thereby you have a margin of safety. And even though the future may seem like there's fog on the road and you can't see the road ahead, you trust that, hey, the person who's driving is good enough that they can navigate accordingly, right? Like, what am I trying to say? I'm trying to say that for some companies, the roadmap is super clear. Like, SoFi has never given us a reason to doubt that they will ever miss, right? Whereas Tesla, for example, it has flat out said, the management team has flat out said, hey, we're going to go through some tough quarters. Like, this is going to get worse before it gets better, so on and so forth. And so in those two instances, in the first one, if they've never given you a reason to doubt, then you're going to probably be paying a premium. But if they say, hey, the road ahead is uncertain, and you just have to trust us that we can weave our way through, and you get a discount for doing that, then you're like, yeah, sure. If I get odds, I can do it, but not at this valuation.
Yeah. And for myself, like, I only have shares, and it's like 5% of my portfolio. So it's a very comfortable weight for me here. Part of that, even I sell, it's even like in the swing portfolio technically. So where I sell calls and cash trigger puts more aggressively. So yeah. So Gig said it, I think, well. You both sound much more reserved about Hims than deserved. They reported a fantastic quarter. International expansion, better cash position, new verticals coming, reiterated 2030 guidance. I mean, long term, you're absolutely right, Sigig. I didn't see any thesis breakers there at all for myself. Again, like, if we were looking at Hims as this is a weight loss GLP-1 company, A, we would be idiots, and B, like, this would be a thesis breaker, but it's not. But short term, there are some headwinds. We knew that going in. Like, I knew that this was going to be a challenging quarter. That's why I focused on the Hims earnings call instead of the Palantir one, which I knew was going to be good. Like, I actually said it was going to be excellent. I was bearish in my expectations of Palantir. We're going to talk about that in just a minute. Like, dude, I bought more Palantir today or last night. Yeah, all-time highs. I don't freaking care. I've not bought since the 20s. So, but Hims, there's some short-term headwinds over the next couple of quarters. Like, it's not all golden and good over the next, half a year to maybe a year. And it does take time when you bring in, basically new key members of a C-suite for that team to gel. If they're really, really good, that can happen in a couple of quarters, and you get a very streamlined vision. Or if you have somebody like a Mark Zuckerberg, who is like, this is my exact vision. This is exactly what I'm bringing you into. I have a feeling that Andrew Dudum, the C-suite, that they had an idea of what they wanted to do, but it wasn't like as concrete as what Zuck might say. Like, I need this exactly from you, this exactly from you, go and do it.
Yeah. Well, what I would say to Segig is that I think that to a certain stage, the business is like a snowball going down a hill. Like, it just picks up momentum and grows naturally. And a lot of their spend was in sales and marketing. And I feel like we're now starting to reach like the rocky terrain where it's not going as smooth, as seamlessly as we initially thought. It's not a thesis breaker at all, but it is something that we have to adjust accordingly, our expectations. And the reason why I might sound a little bit more deflated around Hims than the market is because my expectations on Hims were higher than the market's expectations on Hims were. And so I think that if you're judging this company by its ability to be a unicorn, then that's going to be a very tough bar for them to hurdle through. And they need to be put through a couple of bad quarters for me to really see what is the true make of their leadership team and their ability to execute. And I think right now, the coming quarters are going to be really emblematic of that.
Can you highlight Unflappable Fog's comment, 704? Yeah. So I bought Palantir and sold SoFi, and I hold PayPal because of valuation. That's if that was the case, that would be pretty questionable, but that's not the case. So you need to go back to basically Tevis's remark as far as like selling HIMs, basically getting out of options. Or I don't know about all options. So did you get out of all options, or you're just
no? I still hold a lot of my. Well, luckily I got out of some before earnings because I was like I was not super confident. I'm going to get out of more, but I don't want to sell options on a day when it's down 12%.
Yeah. So SoFi, Nubank, and PayPal are the only things that I have options in as far as leaps, long-term equity acquisition. Man, I can't think of the A for some reason. Anyway, these are long-term options. SoFi, I've not taken gains for a long, long time on that. I didn't love, again, I've talked about this, and I don't want to beat a dead horse, but I didn't love the timing of that capital raise. I don't hate it. I don't love it. And I'm like, I'm going to take a few options, not shares, off the table. Shares, that's one of the reasons why I have leaps in very undervalued positions, is as it runs, I do want to take some profits, and I plan to in options. Like you have to, or you have to exercise them. Now, I didn't have to do SoFi right here. These expire in January 2027. So I've got plenty of time, but it was a small part of my cut. And it was just because it's like, okay, I've got a ton of fintech right now. SoFi has run a bunch. I don't especially love that move. And I still think SoFi has a lot of appreciation to do. That's why I think right now it's my second largest position. It's not that I'm bearish in SoFi at all. We'll talk about Palantir in just a moment. I do not hold PayPal because of valuation. If I did, I mean, that's not my style of investing. It works for some people where they see a multiple and they're like, hey, it's undervalued, I'm going to buy it. Instead, I hold PayPal because that entire ecosystem has changed and transformed. They have an amazing CEO. I think it's going to take maybe a couple of years for everybody to like realize how good Alex Chris is, which is strange because, I mean, you saw what he did into it. Like he basically ran half the business and he just absolutely killed it. I see the whole ecosystem that they're building. What I underestimated was two things. The dysfunction of PayPal prior to Alex Chris coming on. I was like, yeah, there's some things they need to change and improve on, but it's not too bad. No, I was wrong. And I was wrong on how long it took to turn around, partly because of that dysfunction, but also partly when you're a business that has been around a long time and you're heavily, heavily siloed and you have no actual vision, and you've been run by somebody who's frankly asleep at the wheel. Dan Schulman once was really good. I don't know what he was doing. He should have been fired like 5 years before. Maybe not 5, but during COVID, honestly, when he pitched, hey, let's buy Pinterest. It's like, okay, just get rid of the dude.
Hey, in his defense, PayPal was the highest when he pitched that. So I'm just saying, like
that was like when you're like, that's when people should have gone short on PayPal, honestly. Like it's like, okay, you are moving away from what you actually do well. And this move makes very little sense. I won't say it makes no sense because that's the dream of every fintech app, is to become a super app. But I don't think it's ever going to happen, at least here in the West. So I don't hold PayPal for that reason. Now, Palantir, if you might have more to talk about on HIMS, and we can talk about that and finish that if you'd like. Otherwise, we can talk Palantir. And I want to show the earnings first before I talk about why I bought Palantir, because otherwise you look at the multiples and be like, well, he's an idiot. We got to look at the earnings.
Let's do it. Let's show it. I haven't seen anything about the earning. I think 48% was the year-over-year growth rate, accelerating. And I tuned in a little bit last night to your show.
Since my internet right now is on the non-internet, can you pull up the Palantir slide deck, Q2 earnings? You're going to look at slideshow. It's not the letter. The shareholder letter is the Alex Cart thing. So it's like second or third from the bottom.
Sure. Yeah. Let me find it.
Actually, I can probably just send you the link.
It's okay.
If my internet works. Okay, financials and presentation.
I got it.
All right. And you got it?
Yeah.
Okay, cool.
Let me share my screen.
And
AMD keeps going lower. We have to take a look at that.
Yeah, interesting. I figured they were actually going to put some good numbers. Now they've run a lot. So sometimes, like Upstart, I've not looked at the numbers. Upstart reported his beats. It fell. A lot of things have been running hard. And so it's not too shocking to see it priced at or beyond perfection.
Yeah, LifeMD, where's Sagig? It's down 22%. That sucks.
Oh, really? Oh,
Yeah.
buddy. Well, it was up though big recently, right?
And that's not even like it rebounded a bit to be down 22% because it was down much more than that.
Oh yeah. Yeah. So it like if you look at the chart, it was trading in the 10s, jumped up to the 12s, like in a day, and then fell and is now basically where it was at the beginning of the week. So it's probably for like shareholders, you feel like you're on a roller coaster, but you're basically flat in the week. So that's kind of wild.
LifeMD 22%. We got SMCI down 16.5%. Snap reported today they're down 15%. AMD's down 5%. Open Door down 22%. And then we got Zeta. Where is Elijah? Zeta up 9%. That's one of Elijah's holdings. Bumble and Match are both up. Yeah. Everything else is kind of flattish.
Yeah, and 4. Look at 4. Shift 4. FOUR. There you go. Yeah, that one like just collapsed. There's something kind of interesting actually happening in the payment space. It's that I think that overall people see that sector as like crypto is going to destroy it. Stablecoins will destroy all of it. And all these companies are going to zero. Not quite, but it kind of helps explain like the PayPal reaction because it was good, solid. Shift 4 was not terrible. But I mean, they raised guidance. So it's like, I've not gone through every single aspect of that earnings. I hold it now as a cash ticker put only. So a singular one. So not a huge thing, but not small either. $8,000 is not like pocket change to me. Unlike Tevis. Tevis is like,
dude, can I show you something? I looked at this and I found it so hilarious.
Oh yes.
Snap's chart is like a literal roller coaster. Look at all of these gaps. It's like earnings. This thing drops from $13 down to like what, $9. Went up, drops again. Like, look at this shit. It's just such a roller coaster, man. So like I've never seen so many gaps in the chart.
Well, for the longest time, the pattern on Snap was run up in earnings and get destroyed. And there was like maybe one earnings a year that was the exception, but then you get destroyed later. So I don't know, man. Like Snapchat's one of those that I know there's a lot of teams that use it. They just have a hard time monetizing, and there's so much competition out there. And when your core group are people that are like 13 or 14, they do not have money. So it's tough. Plus, you know how I feel about social media. So
yes, sir. Oh, can I also show you one last chart, and then we can go to Palantir. Our favorite stock in the market, Roy, Figma.
Yeah.
Figma is let's put the 30-minute candles up. Look at that beauty.
Yeah. I mean, like it shouldn't have been doing what it did in that initial IPO. But by the way, I did file for I think 50 shares on Bullish. So I'll probably get like 5. I don't know that it'll pop up that much. Bullish is, by the way, a crypto company that's overseas. They do actually a lot of volume. I became kind of aware of them just because of PayUSD. A lot of that flows through what they do. And they seem like that they're decently run. They have some connections, interesting connections with businesses. Not a long-term thing for me, just a fun little IPO play. Figma, I have one single freaking share. And, I got it at like $33. I've been looking more at Figma. I mean, I wouldn't buy more here, but it wouldn't shock me. Like usually with IPOs, I'll wait 3 to 6 months. if Figma keeps falling and it gets down to like $30 a share, which is actually below what I got for the IPO price,
Yeah.
I might take a stab at this. So the bear argument on Figma is AI is going to disrupt what they do, but actually Figma is a very nice hybrid between human actual users and AI helping basically accelerate everything that you do. I've not played with the platform, and that's something that I need to do. Actually experiment with it and check it out and see how good it is. But it's the people that use it. Like, there's a reason why it's growing incredibly rapidly, and I see AI continuing to enhance it, not destroy it. The other part that I like about Figma too is I don't like companies that are like, okay, AI is going to take over humans, and there's no need for humans at all. That's why I like Palantir, because it's a partnership between humans and AI. That's why I like Cloudflare, even though I don't own a position, is because they understand like there needs to be a place for original content by humans. There needs to be a check against what's happening with LLMs. And of course, there's a lot that they do, but that's just like a little piece of Matthew Prince, the CEO's mindset. And Figma has that same kind of mentality as well. Not only do I think that that's morally right, but I also think that's right in the way that we're headed for most things in the future. So wouldn't buy it here. Yeah. If it's under 20,
But,
dude,
like, I think
that's a no-brainer. I don't think it'll get there, but like we could see below 30, and that's very attractive. So I'm not touching it here. I got my one share that I'm diamond handing. I'll sell it when it gets to $1 million. Just kidding.
I think like this is probably the most salient comment when you're buying IPOs is like the amount of IPOs I've seen that are that have the exact same pattern. Like, this reminded me of Webull as well, because Webull was like the exact same pattern. Like, look at this. You know, can you tell me when the IPO day was? Like, what was the other one, Roy? There was another stock that just literally
Newsmax.
What was it?
Newsmax.
Was it Newsmax?
Yeah, I don't remember.
Yeah, look at that. Look at that.
Yeah,
so
that one's so dumb.
So Figma, it could be looking like that.
Circle too, CRCL, but Circle is kind of an exception. Part of it is like it's a really good company. It is still way too expensive. But oh, it's sweet. I kind of called the top, which is awesome. That almost never happens for me. I don't bet against companies usually. I didn't bet against it here. I think that they're good, but I'm like, dude, if you're bullish on stablecoin and you think that Circle is great, and I do, just buy Coinbase. They actually get more revenue from USDC than Circle does.
The point is like, look, this thing opened at 64, went to 300 over the course of a week, and now it's 150. Like, you got a 50% discount if you bought the top, basically.
Yeah.
And so the point is like, well, Figma's going to look the same, most likely, because the euphoria dies down, the hype dies down, and you're going to probably have it settle at a range that it finds its footing. I also want to pull up Enphase because Sagi said it's like at $30 or something. Oh, yeah. And then I promise we're going to get to Palantir because I really want to hear
brutalized.
Jesus Christ, look at this thing, man. What the heck? What the actual heck?
There's actual stupidity right now with the United States government and policy. Like, we need power. We need a lot of power. Data centers and AI are consuming a lot. In any way, like, we need more anyway. For whatever reason, the investment in the electrical grid itself, but also power generating companies has lagged. It did spike up a little bit during COVID. Part of that was, of course, incentives and the interest rate too, when it related to solar. Solar is like the easiest way to actually rapidly scale your electrical system, just because it's like, there's a lot of people that have homes and roofs. And when you make it actually compelling that you save money by installing solar over time, and your interest payments are very low relative to what your electrical bill would be, it's an easy layup, even for guys like me that, you guys can push back on me and that's fine. I don't really care about like green energy. I'm not too concerned by, I'm not saying there's no global warming and all that stuff, but I think that we swung way too far on that. But if you pitch me something like a Tesla, an EV that is very attractive and saves me money on gas, like, I'm all for it. I'm not hating on gas vehicles. And it's same with solar. Like, I would love to switch off from the grid. I mean, you're still technically on the grid and go all solar, but it doesn't make sense right now. Now, beyond that, they've removed a whole lot of credits, tax credits related to rooftop solar. That's actually being phased out. It was going to be phased out anyway, unless it was extended, and Trump just basically killed it. Tariffs have been a headwind. I think the management team is really good and really solid, but like the question is, well, solar is always cyclical, and right now, just because of regulation in the United States, it's super cyclical with the Biden administration going one complete different way, the Trump administration here. So previously, I sold Enphase at like 60 something bucks at a small loss, and I went more into PayPal, so that's been painful too, but not as painful as Enphase. I'm still interested in that company. I'm going to keep it on the radar, and I did know it's trading in the 30s, but I've not looked at it in a week or two. But yeah, I don't know when that's going to turn around. The market is forward looking, and so it might be maybe a midterms type thing, depending on what's happening there.
Like they're at $4 billion in market cap, and they're doing they did 1.3 billion in 2024.
Yeah, Enphase is looking cheap. Cheap can always get cheaper, guys. One thing that's going to probably happen for Enphase too, even though it is a quality business and they're still profitable, so some of that profit is from safe harbor credits. It's basically them realizing forward revenue on products that they haven't delivered. So keep that in mind. But they're not going to die. They've survived multiple cycles. They're a leader here. And when, not if, but when the whole sector flips from bearish to bullish, they're going to hit all-time highs. But that might take a long time. And the next thing that's probably going to happen for Enphase is them being booted from the S&P 500. Their market cap was already the smallest in the S&P 500, and it's getting smaller. And I know that they're loath to kick companies, but I mean, what is the market cap right now on Enphase? It's
4 billion. It's 4 billion.
Yeah, it's ridiculously tiny. And if there's a single quarter, I know like the price earnings is silly, but I don't know that the earnings estimates are actually accurate. I actually think that usually I think analysts are being bearish. Here, I think that they're actually being a little bit bullish, or maybe some of them just did not revise their numbers. Like things are rough in that sector. So getting kicked out of the S&P 500, usually there is a dip in price that doesn't last. If you actually look at companies that are removed from the S&P 500 that are not on their way to bankruptcy, and this is not, that is usually a very attractive dip that within the next year, it's back up or even better than it was before. So if it gets kicked out of the S&P 500 and we have like an even sillier dip, like we're trading at like 22 bucks a share or something, I'll have a little bit in my portfolio. I'm not going to go all in, but I'll have like 100 shares, just something enough to keep my attention focused on it. Because and the nice thing is, like, that'd be a small enough position for me. It's tiny that I wouldn't worry about it. Like, oh, it's going to 21. It's going to $15 a share. It's like, it's fine. I like it. It's not going to hurt me. Versus like if I went in like with 20% of my portfolio, I would care. It would be painful, even over the short term, even with just shares. So, but it's worth paying attention to. If you guys are smarter than me and you have an idea of when this will turn around, like I'd love to hear it. That's the question. It's kind of like PayPal in a different way. PayPal, we know what company-wise when things are turning around, and frankly, they've already started it. We just don't know when the market will appreciate it. For Enphase, we don't even know as a company as a revenue as far as that entire sector. So
it's interesting, man. Like I think I only have so much of a stomach for scraping the bottom of the barrel and dumpster diving, and I'm sort of doing it on UNH, but I'm getting paid to get in. I'm getting paid to get out, and if I get out with 20% profit, even considering the premiums over the next month, I'm like, okay, thank you, bye. Like I bought a tranche at what 230 whenever it dropped the other day, and I sold covered calls for like 240, and it was at 250 today. I'm like, okay, cool. Like I'll do a little scalp here and there, but it's such a risky game, and I don't really want to play it with volume. I'd rather I think Tanner is right on this, where he's just like, why? Like I tell him about UNH, or I tell him about these other plays. I'm like, oh, it's undervalued. Like you gotta, it's the valuation. And he's like, dude, why? Like, just go into the compounders and chill. And I get that. I totally get it. It's so much less of a headache.
I was going to ask you because I'm like, I don't know. I saw the earnings for UNH. I like scanned through it. It didn't go super deep. There's a lot I don't know about that company. It's, again, not a sector that I really ever want to be in. And we need to talk about Lemonade too. Different kind of insurance, but it's an insurance company. And you're in that one. It was your call for the year for that competition.
Yeah.
And congratulations, by the way. But
thank you.
Are you just in that for a swing, or is there something that you actually saw in the earnings? You're like, oh man, this is great.
Well, I mean, I've been in Lemonade for
UNH.
Oh, UNH. Yeah. So yeah, just for the swing, simply to say that, okay, it was like gonna revert to the mean. I think that maybe this is a dead cat bounce today, and maybe it might it might go a little higher, and then it might fall under 200, where it really has like support in the COVID lows. Absolutely a trade, and simply going off the fact that this is a business that's not going to go away. They have some permanence. Insiders were buying, including the CEO, bought $25 million worth. And they got this CEO back that was the CEO during a lot of their growth period. And he's going to be buying back shares hand over fist. They increased their dividend. Like, they basically said, hey, it was on us. We missed the ball, and we got a little greedy and acknowledged and said, hey, everything we're doing right now is to get back on track. And I believe them. It's just a matter, and I don't think anybody really doubts them. It's just a matter of timeline. And if you are like willing to hold off, and you could say, can you get a double in 3 years from these levels? You probably can. But a lot of people, I think, in these markets, for that risk that they're taking on, probably don't want a double in 3 years. Because like, what? It's 240. What's a double?
Yeah.
Like, 480. Yeah, you can definitely get a double in 3 years, man, by 2028. But like, a double in 3 years is not sexy anymore because we're so used to these like wild 10x's in 6 months.
Yeah, so that's the way that I look at UNH, and I felt more confident saying this, especially after earnings, but I think I did mention it before, is UNH feels to me like PayPal in 2023. And again, I hold PayPal. But what I mean is a lot of people rush into PayPal and they're like, hey, this is undervalued, it's cheap, and it absolutely was. But I think most people rush into PayPal expecting like in the next 12 months, we're going to double our money and then get out. And I see, like, not you, not Chris Patel, not some of the other UNH bulls, long investor, and so forth. But I think most people that are in UNH are doing this as a swing trade that they expect really big upside in like the next year, maybe 2 years. And if UNH, now the one difference, there's two differences with UNH. I mean, there's a lot, but as far as like the differences from PayPal, substantial differences. One is they brought in a former CEO. So it's not going to take as long for him to get his bearings as it did for Alex Chris. He was pretty fast. He's a sharp guy, but you don't have to, wait 6 to 9 months for, things to really start accelerating and turning out. The other is you actually get paid a dividend. And that's not a small thing. When you get paid to wait, people tend to be a little bit more patient. But I think like PayPal in 2023, like we're still here in 2025, I'm guessing by Q4 that the market actually sees what PayPal has put forth in their earnings and guides for the next year. And it blows them away. Honestly, it should have jumped on earnings. It did the opposite for whatever reason. Payments are just not a cool space, I guess, right now. And so I think UNH will be like that it'll go up and down. There'll be some times when it pops up, when it goes down. But I think for like 2.5, maybe 3 years, you're not going to see a meaningful appreciation in price. And I could be completely wrong, but that's just what it feels like to me as somebody that doesn't know UNH very well. So again, novice, but that's my opinion on it.
Yeah, look, it's a distressed company right now. Again, similar to the analogy that we were making before, the road ahead, like they have a plan. We know the path. We've gone through that road before, but it's not necessarily as cut and dry as them doing it again. I think for me, the thing that I did with UNH, and even today when it crossed 250, is I repositioned a little bit because I had cash secured puts for 250 that I closed off. And I also had shares that I bought at like 220, and I kind of sold a lot of them because I know my other tranches of cash secured puts are going to get called. And I just repositioned because that was going to be big trade for me. And I said, why would I, risk locking up all of this money in this company that potentially could take way longer to rebound, or my thesis could take way longer to play out, or it has another leg down before it goes up. Like, I'm not even in it like to a large degree right now. I have a lot of a lot of cash secured puts that are, some of them are underwater, and some of them that weren't underwater, I closed off and just reduced my risk sizing on it. Similar, like for that fact, like if I really wanted to say I want a no-brainer return, I would just put like 500K in Nvidia and just go to sleep and just wake up in 6 years and be chilling. Why would I put a large amount of money in UNH when it's a question mark, when that confidence does not align with my actual amount that I'm putting in? And so I just reduced my sizing.
Yeah, and that makes perfect sense. Like the risk to rewards out there. I saw people say that earlier with HIMS too. It's like, hey, I downsized my position just because that changed. You mentioned that too. It makes sense to do that. Just when, and anything can do that. Like maybe not a thesis breaker, but it changes it a bit. Or for instance, if PayPal was trading at $200 a share, I would have almost no PayPal. I'm like, the upside is not there. Like here, like that. I still see an all-time high by 2030, but it's like, yeah, there's a lot more risk at $200 than 60 something bucks a share. So now the other thing with UNH, or I guess there's two things that might actually change things a little bit faster than, the 2 to 3 years. One is, of course, this is a heavily regulated sector. Sagig mentioned, that there might be a huge spike in premiums, which wouldn't be shocking. Regulation can absolutely change. It's even before the midterms, if need be, as a result of that. Now, the other is because it pays a dividend, although it's not like a crazy dividend. Usually the crazy dividends are stocks that get smashed that are probably not worth investing in, and it's just not a sustainable dividend. UNH, that's not the case. Like easily sustainable dividend. They've increased it. They may increase it further as well. When rates are cut, and it's not a if, it's a when. Very likely this next Fed meeting. I don't think that that's shifted in the last couple of days. I've not looked. But when they cut rates meaningfully, and we are expecting 2, maybe 3 rate cuts, like that's the probabilities by the end of the year. And if and when, Powell's term is up in May of next year, he likely resigns his chair as well. And at that point, whoever Trump had nominated for that initial seat opening is probably going to be the next Fed chairman. I would expect pretty meaningful rate cuts as well. Now, rate cuts are not really that bullish for the mortgage space or industry, but it's extremely good for dividend companies. And the reason why is there's a lot of people out there that are yield type investors. That they're not growth investors. They're not looking for the HIMS and the Palantirs of the world. They never get in that, but they will get into for some bonds. Sometimes they'll be attracted to something like a cash sweep on Robinhood, or even more so, they'll be just invested in a dividend company like UNH. And that will, I think, accelerate into all dividend plays that are, credible, especially dividend kings and companies that have sustainable dividends like UNH as yields are falling. So if we're looking at like a year out from now, let me see if this actually works. Let's see, FedWatch. Yay, it's working, my internet. I'm going to try sharing it. If this doesn't work, you yell at me, okay?
Yeah,
right, so we're going to look at June. We're essentially July. Let's look at July. So these are the rate cut probabilities right now. These can shift a lot, and you can see, if it lets me, how much things shift. It's a little bit less shifty than it is like with the nearer term stuff. We're right now at 425, 450. And so we're looking at somewhere between 3 and 350. So that's 1% rate cut, maybe a little bit more, 1.5%. There's a possibility. This isn't like a terrible possibility of more. If we're looking at under 3% interest rates, a lot of people will be like, you know what? These things that I'm invested in. Now, this doesn't always or immediately impact like the 10-year yield. A lot of people are in 10-year or 2-year, but it does have some impact, and those are actually going down as well. But as those things begin to change, as rates across the board, cash sweeps and not dividends, but other type of yield falls, that tends to push and drive dividend stocks upward. Now, I wouldn't invest solely on that basis, but it's just another like nice little piece that could actually accelerate that turnaround in UNH.
Yeah. So there's, a couple of main catalysts, right? Rate cuts coming down is absolutely one of them because the yield for UNH is going to look so much better for dividend investors as the rate cuts come down. The second one is I think there's going to be more security with regards to that DOJ decision as early as September. And then the third is obviously institutions are going to step in depending on how low this thing can potentially get. It really is going to be a play of when you got in and when you get out. Like, it's not like I know a lot of people are underwater. I know a lot of people are underwater on UNH because they got in at like 350 and 340 thinking that that was the dip. But for myself, like I said, I'm not even fully in. Like, I have cash secured puts. I had them for 250 and I can get in at today's prices. There's nothing like there's no gun to my head that says I have to go even heavier or that I even have to get in today. And the last thing I'll say on UNH is don't even be surprised that if I do get in, that I'll get out like in a month and just completely have it as a trade. Rates get cut. We get some DOJ positive decision. Stock bounces to 280. That's all I need. And like I can be out immediately. I don't need it to go back to 500. I'm not playing it for that because for me, and I think options selling, Roy, has totally changed my mentality on this. It's really like the time value of money is as I value it much more.
Yes.
And saying like, if I'm cutting my HIMS cash secured puts, for example, because they're 85% of the green, and I say to myself, do I want to wait an extra 7 weeks for 15% and all the risk that's associated with that, considering what HIMS is? No, I don't. I'll take the 85%. Thank you very much. Or like I wrote $55 cash secured puts on HIMS. I closed them at 70% or 65%, whatever. My point is for UNH, if I put 100 grand in UNH and I really want to double in 2 years, I'm willing to wait 2 years for that 100% return because of A, B, C, and D is my thesis. If it gives me 20% in a month, I'm out. Like I don't need to necessarily be there for that whole time because it's not a long-term play for me. It's not a long-term conviction buy and hold. It's a trade. And if the trade gives me a disproportionate return relative to the time horizon that I'm willing to hold that trade, thank you very much for the money. I'm out.
And with that, if you guys aren't used to swing trading and stuff, it's good to have time horizons. It's good to have targets as far as selling or trimming. It's also good to have targets as far as your max loss. For myself, I mentioned, Webull was a swing, got out when the thesis changed, actually basically broke even on that. And Lululemon was the other one. Now, Lulu is still on the radar, but I had a max loss threshold on that. I didn't put it in there. You can put stop losses and stuff. I don't tend to do that just because silly things can happen in the short term and it spikes down. But I got out of Lululemon completely. It hit my max loss threshold, which wasn't really that much. I was like, there could be further downside here. I'm comfortable with losing this amount of money. Lost it. Sweet. I can offset some gains. Ideally, I would prefer more gains and more taxes, but that sometimes happens. I'm not a great swing trader. I mostly do that for fun. Long-term investing, I think it's way easier identifying quality companies and then just letting them work. Like it's pretty nice. And speaking of quality, when Tevis gets back, let's talk Palantir. Then we need to talk Lemonade. I think we're going to skip the NVIDIA. I talked about NVIDIA earnings. Earnings aren't yet. It feels like that they've done earnings every single week just because the massive CapEx stuff, that stock is running up. Today it fell a little bit. A lot of things fell. But one thing that didn't fall was Palantir. So can you share this? I'm sharing my screen. If you want to bring that up.
There was like a birding smell in my house. I thought I had left something on.
And actually, before we pivot away fully from UNH, can you throw up KZ's comment at 737? Because that is related to UNH, and I thought it's a good one. Buffett has a secret stock. It's almost certainly not going to be UNH or anything outside of industrials. When they do a 13F filing, and they've not done one yet for this quarter, maybe they have in the last couple of days, it shows the sector weighting, and you can infer from movements there versus what they actually did, what sector that secret stock is. So it's not 100% guaranteed, but it's very likely an industrial, which is not UNH. I put on X, by the way, the company that I thought it was, Illinois Toolworks, which is ITW. It's something I've been watching for a little while. What I haven't seen, though, usually in Buffett stocks, you'll see a couple of things as it relates to stock price movement, and you'll see institutional holdings like actually increase, even while you don't see the same thing as far as those that actually reported, just because, you know, the nature of the secret sauce. By the way, that shouldn't be done. That stuff is ridiculous. We shouldn't give special treatment for Warren Buffett. I'm sorry, but so no, he did not buy UNH unless it was like really, really recent. I think it's very untrue. He does love insurance though, so I'll give you that. Now, Tweaker said, sold all my NVIDIA for Palantir. Buy more Palantir too. Throw this up, please, and we'll go through it. Probably pretty quickly.
All right, let's do it. This is such an eyesore, dude.
Well, yeah, this is just their highlights.
We'll have an aneurysm looking at this. This is much better.
So these are ridiculous numbers. So U.S. revenue, this is government and commercial, which is most of their business, grew 68% year over year. Now, that's not their whole revenue. They grew nearly 50% as far as their whole revenue. And when you're talking about a quarter that is over $1 billion, this is almost unheard of. The other part is their margin actually increased. When you can grow nearly 50% year over year, you're already at the size and scale, and your margins improve. You're a freaking unicorn. I already knew that about Palantir, but like even more so. U.S. commercial revenue grew almost 100% year over year. Alex Karp had comments in earnings call. He said that he thinks that they're likely to 10x this specific segment, U.S. commercial revenue, over the next 5 years. And I don't think that that's crazy at all. Like a lot of companies, they would kill for 20% year over year growth. This is 20% quarter over quarter just for this segment, though. U.S. government. Famously, Kathy Wood got out of Palantir a while ago when Palantir was much lower back in, I think it's 2022, because they're like, oh, U.S. government, there's not really that much upside. U.S. government grew 53% year over year, 14% quarter over quarter. It's so bullish that they're looking for ways to actually shift some of these contracts and volume over to other providers. Potentially, they're trying to get Microsoft and OpenAI to help with AI to do that. People read that and were like, oh, it's very bearish. No, it's if you look at the actual government spend, for the contractor Palantir versus other contractors, it's really small. So what that really signals is they're seeing Palantir win contract after contract after contract. That's why they're growing 53% year over year. And they also see that not necessarily accelerating, but continuing. Maybe not at a 53% year over year. I have them for at least a 25% CAGR over the next 5 years, just for this segment. We already talked about that, 10xing in 5 years. International is the one black spot, by the way, if you're going to look at it. International is basically dead. And we can talk about that in a moment if we want. So here's the revenue, 48% year over year, 14% quarter over quarter, to the first $1 billion quarter ever. We don't care about the SPAC stuff. Okay, so let's look at a couple. Actually, there's one other. A couple. So remaining deal value grew 145% year over year. Highest ever U.S. commercial total contract value, up 220% year over year. Highest ever total contract value of $2.3 billion, up 140% year over year. You look at their billings, ridiculous, customers and everything. This is fluff. It's all nice and important, but whatever. Here's the actual financials. It's their best quarter ever. And they've had ridiculous quarters. A lot of people are like, it's too expensive. It is freaking expensive. Yes. But a lot of it, and a lot more than bears will indicate, they're like, oh, Palantir's going back to 20. If you think it's going back to 20, it's because of a stock split. That's the only reason. Or the United States government falls apart completely. Otherwise, no, it will never go back to 20. I don't know that it goes below 100 again. Now, it probably will pull back with the broader, but we thought that last time. Look at the GAAP earnings. Like this right here is just, it's filthy. Now, this was because of one-time SARS and RSUs. GAAP operating income, same thing, just ridiculous. The rule of 40, this is something for SaaS companies that you're looking at. Usually the goal is to get to 40%. Palantir beat that. I guess it was quarter 3, 2023. I thought it was quarter 2. Maybe I'm wrong. And they continue to accelerate as margins and as top line growth accelerates too. Now, I want to show you 2 other slides here. We won't get like too deep in the financials. So look at this. I love this slide. This is a new slide. This is Rule of 40, enterprise software companies. So mostly who the Rule of 40 is. I know that there's companies like Block, Robinhood, and so forth that are not SaaS companies, but they still talk about Rule of 40 because they have some SaaS-like qualities as well. Palantir is here at 94%. So this is Rule of 40 of enterprise software companies with over $1 billion in trailing 12-month revenue. So Palantir is basically at $3.5 billion over the trailing 12 months. So like they're a lot bigger than this. So this is including some smaller plays. Like, look, they're on an island of their own. It's like it's ridiculous. And then you go here. So this one, it's a smaller number of companies. It's 25, a top 25 market cap companies globally, which is hilarious that Palantir is there. You know, they're guiding for this year a little over 4 billion revenue. They might hit 4.25 billion. Next year, they might actually hit 6 billion, which is just insane and crazy to think that they might do that. If they don't, it's going to be 5.75 or something like that. Insane growth. Nevertheless, Palantir is there, and so they're like, okay, let's look at the Rule of 40 score relative to all these other names. Now, one name stands out here. Can you read that? You might not be able to.
NVIDIA, yeah.
Freaking unit. Eli Lilly, incredible company.
Surprisingly right beside Eli Lilly.
Partly because of Novo stumbling, partly because of new product lines, and partly because of this. I'm like, honestly, if I was going to swing a company that was health or pharmaceuticals, or actually, just a large company, it would be Eli Lilly, not maybe TSM, but probably Eli Lilly, honestly, not UNH. But yeah, they are almost on an island. They're past the rule of 80 frontier, which is silly. By the way, bottom line, adjusted operating margin, or over here on the y-axis, the year-over-year revenue growth. So ridiculous quarter. So going back to that question a little while ago, where they're like, well, Roy's buying Palantir, or he's buying PayPal because of valuation, and he's buying Palantir, which doesn't make sense as far as valuation. The reason why I'm buying Palantir is a few things. This company is an absolute freaking unicorn. I already knew that. I made a huge mistake with covered calls, and so a lot of my position got away. Covered calls got away from me. Thankfully, not all my position. And so my Palantir position went from my largest position by far to number 4, actually. It's the 4th largest position. I don't like that. Now, the only thing I hate about Palantir is their valuation. Everything else is amazing. And they're accelerating. This is a company, by the way, let me actually pull up a side thing here, because this illustrates. It's kind of like SoFi in this, where you're not going to have lumpy quarters like Robinhood has, or like Hims has, although Hims to a lesser extent. Because of the nature of the business-to-business cycle, it's very predictable in terms of revenue. So here's the revenue. I mean, like, have they ever had a down quarter? No. Will they ever have a down quarter? I mean, weird things can happen, but like in general, no, especially not year over year. That just doesn't happen. Like free cash flow, they did have because of the RSUs that were given, the SARs rather, one down quarter. But I mean, they're just compounding billings. Like this is them just billing forward. Revenue per top, like net dollar retention, I believe is 128%. Is that right? Somebody can correct me in the comments. Net dollar retention, if you're not familiar with it, it's basically existing clients that up their contract, which happens for a variety of reasons. Sometimes they see a product that they want more of. Sometimes they're using, a lot of these are built on use, and they use it a lot. We've seen a whole lot of clients like comment on this. The other thing that's happening with Palantir, like if you look at the Quarter app, they are getting so many freaking mentions in Quarter by other companies. Some are competitors, a whole lot are partners. They're talking about just stellar results for Palantir. The only time that I've seen a company mentioned to this much and like this is NVIDIA, when it had those NVIDIA moments like 2 years ago in 2023, because everybody was basically mentioning NVIDIA partly, I think, to pump their stock, but also because NVIDIA was killing it. And they're like, well, if we get like 2% of the revenue that they do, like, look at us. Or they were like, hey, yeah, we partnered with NVIDIA because they're an amazing company on this and this and this. This is what you can expect. So does the valuation make sense? No. Am I going in hard? No, I bought 5 shares. But what I said was, this is the beginning of the DCA. DCA is just me buying a certain amount. It's always under $1,000 buys. It's not like a massive amount. It'll probably be like less than 500, honestly, on a weekly basis. But, over the next year, 2 years, 3 years, I'm just going to keep buying some Palantir because I want more of it. I would love for the stock price to go lower. Love it. I don't know that it will. And it's clear to me the direction that this company is going. Now, you can say and argue, and I'm not going to argue hard against this, like, well, that's really bullish, a great revenue, Great increase. And those comments 5 years out are amazing, but they're already priced like they're doing that already, not 5 years out. Maybe. One other thing that's happening as far as Palantir, the customers that they have, the quality that they have, the ROI that happens in the Palantir investment, it is having, not yet. It will begin to have as much impact as, let me back up. They're going to have so much impact on the U.S. economy in the next 5 years, if what Alex Karp is correct, that over the next 5 years, they do a 10x on the commercial revenue, because that implies greater use for existing clients. And that implies a whole lot of customer acceleration. They're already moving down market. And this is not just like, hey, let's slap in a Palantir and it's kind of a neat tool. No, this is like, look at AIPCon, look at the customer testimonials that are not paid anything or given anything by Palantir. They just show up and want to talk freaking Palantir. This is, for many companies, company and trajectory altering. Like, one of those great things we talked about maybe a few months ago was AIG. AIG, very, very old business, not super exciting company, not a lot of growth, because of what Palantir has done as far as on the insurance side, as far as calculating. I can't remember, it wasn't calculating the premiums, but I don't know that sector very well. You can talk about Lemonade here in just a second. They were guiding, because of Palantir, 20% revenue growth year over year, if I'm not mistaken, for the first time in like more than a decade. So that's not going to happen like for the entire US GDP. Like, hey, we're going to see like 20% GDP growth in it. Like, no. But what I'm saying is, these are the new roaring 20s. Palantir and NVIDIA are two unicorns, and maybe the only two unicorns that are absolutely empowering the United States economy and companies to completely reinvent themselves in some cases and to alter their trajectory. Those companies that are slowing down, that are maturing, that are older, a lot of them are finding new legs and new steam because of what's happening in AI. And again, hardware NVIDIA, software Palantir, and there is no second best. I mean, there's AMD, they're good, they're solid, whatever. Palantir, it's an amazing company. There are other players there, but there's no one like these companies. So that's why I'm investing more in Palantir. I hate the valuation, but I'm just going to make myself do it. I don't think I'll regret it in 5 years.
I have so many things to say. I respect it. I think as long as they're accelerating in their growth rate, like, yeah, sure, they have all the attributes of a great compounder over time, and the trajectory shows that. I think the valuation is the biggest, sticking point, because like, valuations don't matter until they do. So I want to bring up some comments like, oh, Palantir is probably a better investment than UNH, even at these crazy valuations. Buy a growing company or buy a company trying to turn around. Like, in order for, and I'm not arguing that UNH is a better company than Palantir by any stretch of the imagination, but because it's so shot down, in order for it to get to where it was, that's like a 3x. And if Palantir does a 3x, they're almost $1 trillion company. And so that's the first thing I wanted to bring up. The second thing is, like, you only need to get it right once. And I really love this comment, right? Because like, you don't really need to have amazing, like, you need to be right with equivalent volume a few times in your life. What is that Buffett thing where it's like, hey, you only need to take a couple of big swings, and then you'll make life-changing gains. I think it's also interesting, Roy, because like, I don't know, man, like, I attribute it to this market where it's like up always, up only. And when we're asked, like, Palantir could very easily go back to $60, because did you see what happened in 2022? Absolutely.
I disagree with you. Pull up their chart. Pull up their chart. Take a look at what happened during the tariff stuff.
Okay.
Okay. Before you look, how low do you think it got? If you've not looked already, if you have, you could just say.
I haven't looked. I was looking at Meta, because I was like, dude, like, if Meta can go to here, let me share this window. So this is what I was looking at. Like, Meta is an amazing compounder, blah blah blah, and then like, look at these massive drawdowns, man. Like, oh, from 730 down to 470, and that's Meta. Like, any company can go down, and I think it's at some point absolutely. It's like, oh, well, it doesn't make sense for it to go down like 70%. I'm not saying that, but can it be cut down 50%? I think anything can be cut down 50%. Yeah, exactly. And so, hold on, let me pull up
50% is not the valuation you said, though. We're at the 170s right now.
Okay, fair enough. We're 170s already. Sure.
I won't disagree with you. Like, could we see it go down 50%? Crazy macro stuff, miss on the top. Sure, yeah, that can happen. 65 would be hard. Go back, look at the tariff stuff. Look how low they got. At the very low, a lot of companies are smashed.
Where am I looking? What's
April 5th is the low for a lot of people. I think they hit their low, April 4th.
$67, $66.
And that was without seeing these ridiculous earnings. Remember, previously they were close to 40% revenue. Now they're close to 50%. The accelerated guidance, like they're significantly stronger. And even like the crazy thing is, I saw a bunch of analysts capitulate that have been like previously. There was I can't think of his name. Brent Bill. He ended up. He was very anti-Palantir, and he's like, this is crazy valuation, doesn't make sense. For the longest time, this quarter, he's like, yeah, I get it. He's like, it's still expensive. Freaking amazing company, amazing results, and it's not as expensive as people think. I can't remember what the price target was that he put out there. There are still some Gordon Johnson type people, Rishi Jaluria, who raises price target to $45. Sorry, Rishi, it's not getting to $45 unless something really terrible happens to the entire planet.
Yeah, I don't disagree with that. But like here, let me point you out to something. Like this might look like a blip in this chart, but like what was the peak here? 125, peak to trough, 125 to 66. Like that's pretty much a 50% right there.
Oh yeah. But yeah, my pushback is like 65 is going to be tough to ever see. Like, could we see 85? Sure, we could see 85. I still think that we will probably see Palantir under $100 again. That wouldn't shock me. That may not be for a couple of years too. Weird things can happen. Even if you look and you're like, wow, they've doubled their revenue in 2 years and they're trading under 100. It'd still be expensive. You got to look at that multiple. And that's why I'm not like, I'm going to double my position here at all-time highs. No, I'm slowly DCAing. Maybe over the next like couple of years, my position does double. And my cost basis goes from like 12 to, what would that be? Like, 70, 80? That's okay.
I think one of the things, because I agree with Jesse's comment here. And by the way, guys, like I'm not preying on Palantir's downfall in the slightest. Like I get it from a company fundamental perspective. Like, what's that?
I said, why do you hate America? I'm just kidding.
No, dude, I love America. Give me a visa, please. Like, look at this. Like if the revenue stalls, it's going to fall so hard. And I kind of agree because you're setting yourself up with really tough comparables and like 49% growth rate, 50% growth rate. Like, I don't think anybody's delusional enough to believe that those are going to keep growing year over year. Like at some point it's going to plateau and drop. It happened for NVIDIA. It's going to happen for everybody.
Well, yeah, if you look at the way that they're guiding, it's not happening anytime soon. Now, could it happen next year? Yes. I don't expect. Like actually, even a year ago, I remember Data-Driven Investing and he's talked with a lot of people about the valuation founder. Again, he's like, the company is amazing. It's just really expensive. True. The comps do get harder, but that's the same thing what people were saying in 2023 and also especially in 2024. They were like, man, look at this. Now, it is a harder comp in quarter 4. Quarter 3 is actually not too bad there. But it was the exact same comments. Too expensive, much harder next year comps, and they're just accelerating their business. So I wouldn't be surprised if over the next year that they're growing close to 50% year-over-year revenue growth. They're not going to do that for 5 years. You run into a lot of big numbers. They're guiding for over $4 billion in revenue this year. At some point, like you can't. But that next leg up, what I think is going to happen is when we get 5 years out, and it may not take that long, but I think given Europe, it probably will, just because they don't like AI for some reason. They don't like tech. They're distrustful of some U.S. companies. And I kind of get that because they're used to dealing with a typical Silicon Valley type of kind of toxic is not the right word, company like the Metas, like Google even. I'm not hating on those, although a little bit on Meta. But Palantir is just a different model. But if what happens, and it's just an if, it's just a theory, if they do 10x their U.S. commercial growth, that will have a massive impact on GDP acceleration. That will be in headlines, that will be in news. And at that point, Europe will finally realize, and I hope it doesn't take 5 years for them, like, we actually need to adopt AI, not just regulate it away, pray it away, hope it goes away. And there's no better company out there than Palantir. So that's really like that next leg up, because they're not going to do 100% US commercial growth year after year after year. They might do it for another couple of years, but like 2 years out, like, no. Like, we might be looking at like really good numbers, like 50, 60% growth, 25% growth in US government, which is a lot more reasonable. But I don't know. There's a crazy amount of growth. That's why it's priced that way. And you're right. If that changes, like let's say that they come out next year, like, actually, we're going to guide for 30% year-over-year growth. That's really good growth. The stock might go to $85.
Yeah.
I don't expect 30% anytime soon.
Look, man, I've been through market euphoric cycles, and I've been through market downturns where there is not a shred of optimism out there. And I just feel like you can see the patterns repeating, and people, and the way people talk, and the way people carry themselves. And like, sorry guys, but you're talking about a growth of a company that has an inside track of the US government that ain't going down anytime soon. Like literally last week, it went down on news that the US government was like looking to replace them or something like this. I didn't really read too much into it, but the point is like, nothing in this world is permanent. And I think it can keep growing, but in order for them to keep growing, they have to keep executing. And right now, what they're doing through their execution, it's all well-deserved, but through their execution, they are setting some wildly unrealistic expectations with the market for years to come. And maybe they can follow through on that promise. But it's also going to be a matter of if they can, and what the macro will be at that time if the market is risk on in the first place. Maybe the realistic case is that it doesn't go to $300 a share. It doesn't go to $50 a share, but it kind of just like oscillates for the next couple of years, and it catches up.
I expect that at a certain point. Same thing happened in NVIDIA. And again, NVIDIA is a freaking unicorn. Sure. It still is. We saw that slide. Until really like the April 5th drawdown, and then it's pumped way back up into all-time highs. It basically sat flat for like 5 quarters. And if Palantir does that, that's great. I can still sell covered calls against it carefully because Palantir. And I think that's actually the most realistic scenario, right? Is we may see some further upside, like maybe $250, a share in the next couple of years. But it's probably going to have like maybe a couple of years where it just, it went up like 8% this year. Not 80, 8%.
And the craziest thing, Roy, is literally if Palantir goes from 2 years in a row where they put up 100+%, in the third year, it's like it goes up 8% this year. I don't think anybody, bear or bull, would bat an eye on that. They'd be like, okay, you can take a breath, Palantir, you've run really hard. The fact of the matter is that somebody who bought at 170 is like, what the heck, 8%? That was promised, riches. But anyway, so whatever. That's my piece on Palantir. I think that they have grown into a company that, quite frankly, is unrecognizable from the company that I sold once. Because the company that I sold once had 13% growth rate, and Karp was, in fact, breaking his promises. So this comment is bullshit, because he had said we have 30% CAGR for the foreseeable future, next 4 years, and they came in at 13%. And I was like, you know what, like. And then what happened is a couple of quarters after, they developed AIP, and then they started like really accelerating with the boot camps. And so
if you look back, Tevis, he's talking about multiple years. He hit that 35% CAGR. It was just lumpiness.
Sure.
And I told you, man, I'm sorry. I love you. You're my friend. I told you AIP, like you literally said, I don't know that AIP and boot camp is, the silver bullet for Palantir.
That was like 6 months. That was like after I sold, dude. AIP didn't exist when I sold.
I know, but the price was like $15 like $20 a share, something. I'm like, dude, you need to reconsider this. The other thing that they've done too. So they do such a good job of eliminating their weak points, and there's always a choke point in any business. For them, the biggest thing was trying to scale, and a lot of that was like, okay, how do we actually get past this resistance that a lot of companies have? Because the resistance largely was for the internal engineering staff that always thinks, oh, we can build it just as good on our own. Every company thinks that. Otherwise, like if they think that they can't do something, like I don't know what they're doing. The AI moment changed that for Palantir. So that was like a free, they didn't have to do anything. That was great. But AIP alleviated like that long sell cycle that they had. That was their next biggest issue. And it eliminated the need to having so many forward deployed engineers. Now that still was a choke point. And then they basically launched the forward deploy engineer version of the of AIP. They have been building on that with OSDK and with some products that basically help a company that doesn't have ontology at all to be able to formulate that like rapidly, like in minutes, not in hours, days, weeks, years, whatever it would take to not only structure the data but have that full ontology. And with this newer product, like they basically have scaled their engineers to the extent that Alex Karp, when he's saying we have so much demand right now, and he previously said that we know that this is true because it happened. That we're being very selective of the customers that we're prioritizing and working with. And he also said that they're not looking at expanding their headcount. They're instead looking to do more with less, simply because their own products help them leverage their unique unicorn skills and abilities and talents, which is crazy. Like you look at the way they're growing, like any company would be like, okay, well, yeah, we're growing like amazingly to keep up with demand. We have to increase headcount by like 15%. Yeah, it makes sense. No problem. They're doing the opposite. It's crazy, dude.
Like I said, they're with the advent of AI, like they caught that wave at a perfect time. And that was not like it quite frankly is like almost an unrecognizable company. And granted, I haven't even read through an earnings report in the last 2 years of the company, just like from secondhand, listening it to you guys and Amit and Tanner and then these guys talking about it. Like it almost seems as, and like good on them, man, because like execution is everything in this market. And if you have a company that can execute, yes, they deserve that premium and then some. Back then, AI was not a thing, AIP was not a thing, and the growth rates were definitely not a thing at this caliber. And now, they are, and that's great.
Can I do one last thing on Palantir, just related to a question? Thought here. Oh yeah, G-Tan said at 8:03. Roy, serious question: how many customers do you think Palantir will have in 1 and 2 years? I see this revenue jumping, stemming from the long expansion and scale phases. It's a lot of it's net dollar retention, right? I think it's 128%, which means 28% of this 48% growth is from existing customers expanding what they're doing. It's not Palantir charging more for the same products. I mean, inflation, right? But largely it's they want more. And a lot of times when Palantir gets into these initial clients, they realize real fast, like, okay, we're going to use this a whole lot more than we expect. We're going to scale it across our entire business, not this niche. But the actual customer count, I expect something like maybe a little bit north of 10%. Maybe we're looking at 13%. I think a lot of that is that forward deployed engineer that they're using through AIP that scales that part of the business. Part of it is just looking at the many customers that they've landed as well. Like you can just see word of mouth is increasing. I would not expect like this right here to be, well, no, that's right here, 19%. That was a one-off type of thing for U.S. commercial. Now that can happen in U.S. commercial, but again, there are international customers, there are government customers as well. So between 10 and 13%, I think is really sustainable. So slight acceleration on this year over year. Yeah, maybe next year they look at 50% customer count. But also you need to know, let me see, here's the deals. Now deals, by the way, you can have multiple deals with the same company. But the size of the deals, a lot of these are actually really large, but they are moving down market, and it's very clear to see as far as the average revenue per customer. So even if they accelerate customer growth, like the biggest thing is net dollar retention. That needs to continue to go up and expand, and I think it will. United States government, that's pretty much guaranteed. their top 20 clients, that's certainly guaranteed. So that will accelerate faster than I think the actual customer count year over year or quarter over quarter too.
Yeah. So we'll see
Lemonade.
where they end up. Yeah, I actually have to wrap in a little bit. So like we'll do the questions, and then I'll do a video on Lemonade talking about the earnings and also talking about my my thoughts if there is interest in that. So if you guys hold Lemonade in the chat, let me know, and then I can do a video later on tonight. But okay, let's do some questions because that's the more fun part.
Palantir is more fun. No, I'm just kidding.
Yeah, I mean,
I love talking about Palantir. Like, I just hate the valuation. But yeah, let's go to Q&A.
Dude, yeah, like again, I think if it were this company that's growing like this and accelerating like this, and they had a valuation that was actually somewhat reasonable, I'd be all in. Like I am absolutely not afraid to publicly change my mind and raise my hand and say I was wrong.
Yeah.
And
I admire that about you.
You know, at this point, I just think it's like it's run away in such a way where it would be kind of haphazard for me to just, you know, rush back in. It would just be kind of stupid. And it would be chasing, quite frankly.
Just top of your head, doesn't matter. No one's going to hold you to it. But based on what you've seen, what I've shared, what price would you actually buy at, like at least a 5% position in?
Oh my gosh. At a 5% of my portfolio position?
Yeah.
I think like, dude, I think even at 50% discount, this thing is like really expensive. Because like it's putting, look, Roy, it's putting up similar growth rates to SoFi and similar actual, yeah, SoFi grew 44%.
Okay. Yes. SoFi is growing really well. Do you expect Palantir or SoFi? I think Palantir will beat SoFi by at least 10% growth next quarter. It's almost guaranteed.
I don't disagree. My point that I'm trying to make is a very like caveman type of point.
Okay.
Let me just point this. So right now they're putting up similar growth rates. Right now they have roughly similar levels of revenue, roughly, and yet SoFi. And the only reason I'm comparing it with SoFi, even though it's Apple storage, is completely different industries, whatever, is because that's like my number one position. SoFi's at $24 billion and this thing's at $400 billion. And so in my mind, I'm saying, okay, let's just agree that Palantir is going to accelerate their growth in excess of SoFi, right? What is the multiple that you put on just that alone? Because if right now they're at the same starting point, they're starting a race and they're both starting from the same point, and Palantir is the faster runner, what is the handicap that you put on that runner? Because, you know, $380 billion is not an appropriate handicap, but, you know, 200 billion versus 24 billion, 150 billion versus 24 billion. Like, that's what I'm saying. Like, it's very difficult to find out what that handicap is, even though we can both agree that, okay, Palantir might be the faster runner in this race.
But it's expensive. Yeah. So like, just like one more thing here, and then we'll move on to Q&A, is I see Palantir like NVIDIA in two ways. Unicorn absolute execution. And what I expect as far as from the stock, I don't think NVIDIA and I don't think Palantir, like from here forward, are going to be my fastest growers in my portfolio. They're my anchors. I expect Palantir will compound over the next 5 to 10 years and do quite nicely. But like, am I looking at Palantir as like, yeah, it's going to like 20x from here over the next 10 years? No, absolutely not. I expect SoFi over the next year and a half to 2 years will outperform Palantir stock pretty confidently. Does that mean I'm going to sell Palantir and buy SoFi? Absolutely not. I actually have a bigger position in SoFi. I also think PayPal over the next 5 years will probably outperform Palantir in terms of the stock increase, not in terms of the actual company execution. Again, it's a unicorn. It's valued like that. But I'm happy anchoring a lot of my portfolio around the NVIDIAs and around the Palantirs. And if they give me like a 20% return on average over the next 5 years, I'm really happy with that. So That's kind of what I see. I actually think NVIDIA will probably do a little bit more than that. And I think Palantir will surprise a lot of folks that are like, oh, it's going to hold range bound for like 5 years. Like, no.
Yeah, and like
no.
I also don't disagree with this comment. Like, we don't
Oh,
even
yeah.
know what multiple to give an AI company because we've never been in an AI revolution before. If it is in fact a paradigm shift to the degree to which people are expecting it to be, then this could be skimming the surface for Palantir, and it could actually be trillions of dollars because the whole economy will be backed by AI and move up in a similar fashion. That could also be the case. It's just, again, it's all a matter of sizing your risk appropriately. What is the percentage odds that you put on it being, AI being the accelerant to the entire economy and thereby Palantir's chunk of that being trillions? What is the percentage likelihood? And then investing accordingly to that percentage likelihood. Dude, I think I'm getting old because I'm thinking of things completely different to how I was before.
Dividend plays like UNH, yes. Palantir, that's too exciting for me. It makes my heart race, and I might kick over and die. I mean, like, so Sherp had that was a great comment, honestly. So this is a Tesla type phenomenon too. Tom Lee actually talked about this in regards to Tesla, where he thought at least a good chunk of Tesla's valuation was simply because there's no publicly traded company available to us average folks that is like Tesla. Yes, there's EV companies out there, but they're more than just a car company. And a lot of people are in that for the robo-taxis. Yeah, there's an Uber and the bots. Who else that's publicly traded that actually has a chance is out there that's in bots? Nobody. That's it. And so that's part of the thing is like people are like, oh man, bots are going to be big. So what's your choice? Well, to be an accredited investor and invest in Figure or something like that, go to China and invest in some of those, or just ignore the whole thing? Well, no, it's buy Tesla. Palantir is like that. Yes, there are other AI companies, but they're not a one-for-one. Like Tempest AI, yeah, Scale, Scale was private actually, bought out, bad example. Big Bear AI and so forth. They're not the same company. They're like little niches. It's kind of like NVIDIA, although I think that one's not quite as good of a parallel. I think AMD is actually a lot closer to NVIDIA than like the difference between Palantir and these other companies. And like, there's nobody like Tesla. There isn't. So the market has, at least over the last 5 years, maybe this changes, so actually 6 years, has been seen as very willing to give a very high premium and valuation for companies that are absolute unicorns in terms of structure and in terms of execution and in terms of what they can do. If no other company can do that, it's like, okay, I'll buy some of that. So yeah, not my best performer. I don't think going forward over the next 5 years, it'll be good. And it's an anchor for me. Plus, I actually fell in love with Palantir, so don't do that. Don't fall in love with your investments. But it didn't stop me from taking profits, did it? I took a lot of profits. If Palantir goes to zero, I still made an insane amount of money from it. So, all right, Q&A?
Q&A, yeah. Do you think HIMS is going to reach 100 by end of year? That is still my price target. I am sticking to it, Christine. Thank you very much for your question. Was any stock that reported today green after hours? Yes, my boy Elijah is winning with his Zeta pick. It's currently up 9.2%. Match is up 6%. IonQ is up 3.5%. And I don't know what else reported today.
Well, Ionic, I don't think reported. Maybe I'm wrong. Lemonade was pre-market too, and it did.
Lemonade, 30% plus today, baby. Oh, it feels so good. Bullish, SoFi or PayPal to January 2026? Yes. Next question. Hey guys, do you think Upstart earnings is bullish for SoFi, and what's your fair value on SoFi?
I haven't, other than just headlines, I've not looked at Upstart, so I have no idea.
They're down on earnings, and I think they dragged SoFi down as well because SoFi's down 1.5% after hours.
Yeah, I mean, so UNH, like, it was just a really, really quick look. It ran a lot. It's not the same quality of company as a lot of people expected during the previous bull cycle. I don't think that they have clear differentiation there. I don't think they're even as good as Lending Club, to be honest. But I think that they might have been priced beyond perfection. And I think that's maybe the only issue really there because they beat. So,
yeah.
So yeah, I mean, SoFi is bullish for SoFi. You don't need any other company at this point. It's incredible.
Yeah. And I know a lot of people are still buying SoFi at these levels. I think Tanner's even one of them.
If I did not have the position in SoFi that I had, instead of selling options, I'd be buying.
Should I sell a third of SoFi and add more to Hood? Interesting question.
Long term, I like Robinhood better. Over the next 2 years, I think SoFi is going to be really strong.
There you have it. Wonder what the low for M-Phase will be. Any guesses? $0.
It won't go below zero.
Yeah, guaranteed.
It's not going bankrupt. Like I don't know. Like nobody can guess a lows. What's cheap now can seem expensive in the future, so that's tough. If somebody knows that answer, I'd love to hear.
Low for M-Phase? Yeah, I have no idea. I think it can get irrationally low before it starts going higher. Can we please talk about Lulu? I mean, I think Roy is the one for that.
Yeah, I kind of mentioned it, they got out the swing. It's been tanking, and it's not really because of Lulu like it had been in the past. I can't remember when earnings are. I know that they're coming up, unless they reported today and I missed it. Double check. No, they did not. I think that they're good. I think that they're solid. I don't know. Like there was a Placer AI article, like look that one up on Lululemon that talked about foot traffic. It's data driven and everything. So there are some bearish headwinds. Competition is doing well. I think that they're positioned pretty well though. So, but again, I was in just for a swing, not a long-term thing. It's not a place where I want to be long-term. And I got out because I hit my max loss, and I forced myself to keep my rules because when I deviate from it, usually it's bad.
Yeah. So you're still in your Lulu trade, Roy?
No, I'm completely out of Lulu. Hit my max loss, left.
Got it. Why don't you sell puts on Palantir, Roy, and then use the premium to buy shares?
Well, several reasons. One is my put money is in other positions that I want a big amount in. 100 shares of Palantir wouldn't kill me, and I could do that, but I prefer just the DCA stuff. Like the premiums are very good. I'm making money though off the covered calls, and I honestly think I agree with Tevis. Like it's not crazy to think, like especially if we have a macro pullback, that we're a lot lower than 170 in the future. So if I sold and wrote, puts for like 150, 155 for a month out, really good premiums, there's a decent chance with something in the macro because I think that we might be near or even during a pullback. We'll have to see. That we're trading under 150, like that we're trading 140, 130. That's the great thing about DCA is I just like, okay, I haven't actually locked in the DCA. I've just did the manual purchase overnight, but you can either put the dollar amount, which is actually the smarter thing to do. That way you're actually buying more shares with the same amount as you go down, or you can be stupid like me and hate non-round numbers and just say, I'm going to buy 5 shares each day or each week or whatever. And you don't care about the price.
Sure. I also think I think to sell options, it has to be in that sweet spot of the stock that you want to hold for the long term, good enough premiums to make it worth it. I should make a Venn diagram. I'm actually going to do that, and I'm going to post it on Twitter and be like, this is
and like it's sizing too, right? Like I could write puts on Palantir, but weekly buys of $1,000 for Palantir for a while, like that, I can do that. Versus like 15,000 in one chunk. Like for me, that's not a tiny amount of money. It's not going to deplete all my cash, but it's enough of a chunk of my cash. So I guess I'm kind of telling my portfolio size that it's not the best move for me.
Sorry, I'm making my Venn diagram over here.
Yeah, before I pull back, I basically want to keep my cash above 10%. I'm at like 15, 18% right now. So
okay, next question. Chris bet Amit $25,000 that Palantir goes to $50 by 2030. I think it's like touches $50 by 2030. I think Palantir still just getting started, not selling any of mine yet.
Let me add one piece that's critical there. He said Palantir touches 50 by 2030 and not in a minus 20% to the index, the S&P 500 event. So if it was including like a huge macro crash, like we basically had that with tariff days, right? then I'd be like, yeah, I mean, I wouldn't bet that. I think it's dumb, but I mean, Chris has made a money, so he's fine. However, I think with that exception, like, I don't think that we ever see $50 Palantir again. And as time goes on, even if the share price doesn't go higher, as they continue to just compound on what they're doing, that gets even less likely. I would put the odds of that, again, with that 20% exclusion there, of like less than 1%. That's a bad bet by Chris.
Wow, less than 1%. Wow.
I mean, we didn't hit it in the middle of the tariff stuff. A lot of other stocks like Robinhood were smashed a bit. SoFi went under $10 a share.
But here's the thing, Roy. I don't think it's gonna hit in like one jolt to the system. It just completely dumps one day and it hits 50 and it's back to 125 the next day. I think Chris is more betting on like a gradual decline that's sustained over, multiple years.
Yeah. I mean, we'll see. I think it's really low. The other thing too is like you can think of macro, like a macro event that somehow doesn't cause a 20% decline. So what macro event would that be that's actually bearish for their business? It doesn't exist.
Well, let me skip forward a couple of questions, and I'll give you a very realistic macro event. Chip Diamond says, if Alex Karp gets a DUI and Trump pulls their contract, where do you see Palantir?
It's going to be like SpaceX, where he might threaten to do that. It might spike down. It's not going to 50, by the way. And then they're like, yeah, there's no freaking replacement for Palantir. Like look at the NHS stuff that happened over there with the Palantir contract. There is no replacement for them. Look at what happened in Hesse in Germany, where they tried, the government regulators were like, well, let's go away from this. They're actually doing the opposite now because they realize their mistake. Palantir, by the way, is not the same business it was even 2 years ago, too. And like Alex Karp made this other great point that their sales team, which he always has derided, and it probably sucks to be a Palantir salesperson, at least in the past, is now somewhat retail, but like really like employees that in the tech world have a high transition rate. Like they might work 2 or 3 years at a company. Maybe they were at a place that had Palantir. They switched to a place that doesn't. They're like, are you idiots not using Palantir? Let's use Palantir. And they become their own Salesforce, or the opposite, that they were like me, where I worked at that university. I tried hard to pitch them, and I let them know I'm an investor, but I care about this university and I care about Palantir too. This is amazing technology. It has everything they're wanting to do. They went with Zamobot, which is a Microsoft product. And I was like, you guys are missing it. Like, I don't know why. So I left. Now, if I was working at another company like that and they brought me in, I'd be like, you guys have to freaking use Palantir. Like, there's a reason why I'm an investor in this, is I believe in what they're doing. So, yeah.
I'm going to throw you another Palantir question because I need to go to the bathroom real quick. And then you can answer this.
What are criteria you spot on Palantir back then as a unicorn company? I mean, part of it is I hate to use the word luck, but part of it is luck too. So I got in Palantir initially in, I don't know if it was January. It was maybe March, like 2021. It wasn't at the DPO. A lot of people did for various reasons. Myself, like, it was a smaller position then. I didn't identify it as a unicorn. I was like, okay, I like this Alex Karp guy. I see a huge need for this exact product. The need is basically on the enterprise level. If you've ever worked in the company you're doing with enterprise software, the way that this is structured is it's basically like using CRM, which isn't a terrible product, but like at our university, we had Tableau, we had CRM, we had a bunch of other programs too that we used. And it's a Frankenstein monster mess. Now, if you're not familiar with the book and everything, it's stitched together different parts to make this whole, and it just never functions as well as a cohesive tech stack. So you either have to be, before Palantir, almost essentially, either a company like Tesla, where you just write and do everything yourself because there's just not somebody out there that's good enough, or you have to do like what my university did, which is like, let's piece together all this stuff. And even like little updates were like, well, we're rolling out this update. It shouldn't break anything. And everything shatters because it's all stitched together and not naturally there to combine together. And so I saw that mess and I'm like, okay, this is that next vector. This needs to change. And so Palantir is like, there's no other company that I know of that's publicly traded that can actually do what Palantir does. And then looking at the business, like, you could see how ridiculously strong that product was, and the way that some, like BP was one of those early adopters of Palantir. JP Morgan was actually their first commercial client. The way that they talked about the business and the transformative nature. Now, there were some like Coca-Cola that went away from Palantir for a while. I believe that they're a customer now, just because the tech wasn't as good. They did have some missteps like Metro and stuff, but it was very clear that this product was clearly differentiated in the market and was very sticky. And then they had legs from both the government side and also the commercial side. And I'm like, dude, are we gonna have less of a Frankenstein's monster mess if it isn't for something like Palantir? No, there's nothing that changes that vector. It actually gets worse, and there's more and more complexity, which causes a breakdown in a lot of these systems and organizations. So many of them, like my university, didn't know it. I didn't know when that would change. I had no idea. But I'm like, at some point, they're going to realize what Palantir offers, and they're going to go into that very heavily. So that was like that basic framework of the thesis that quarter after quarter, they executed. Now, 2022, you look at that drawdown, like Palantir got under briefly. It might have been pre-market or aftermarket, under $5 a share. I actually bought under $5 just so I said I could. My largest buy was like 620 or 630. By far my largest part of the Palantir position, which did okay. Palantir became 90% of my portfolio in that scenario. Before, in 2021, before that big drawdown, it was maybe like 20, 25%. But as things fell, Palantir fell really hard. And I'm like, dude, I don't understand, but this is an incredible piece of technology, incredible company. And you see that revenue. That's one of the important pieces too. You didn't see a whole lot of companies capitulating. You did see slower growth. There were some reasons for that. And not all of it was macro, to be fair. But I just kept seeing a better product, better company, and even more compelling reasons in the macro for this product. The lucky part was the AI moment with OpenAI. That's not something I actually, well, I can't say I didn't completely anticipate. I remember when SoFi and Palantir were both, like SoFi was 6, Palantir was 8. And I remember Amit was still on SoFi Wkly. That's how when that day was. And we were talking about a 5x, which is more likely. And I said, and this is before I was on YouTube or anything, I said, I think it's likely that in the next 2 years, Palantir does a 5x from $8 to $40. Palantir instead hit like 90 by that time. So I look bearish. But most people, Nate's an exception. Most people at the time thought I was crazy. A lot of Palantir bulls didn't. But outside of that, like, this is ridiculous. This will never happen. And I was just guessing that we were near that AI moment, but I didn't have a strong confidence in the timing of it. Otherwise, like, I would have bought a whole lot more options than I did and be retired already. Not really. I love what I do. So yeah, that's what I identified as a unicorn company, differentiated product that it's not just nice, but the macro and companies need, or customers need, like they require. They cannot do without it. That nobody else has, with incredibly strong leadership and a history of performance and meeting their targets. That's what I identified.
And while Roy said all of that, I made my Venn diagram. So this is basically the rule, guys. Only sell puts on stuff you want to own, because if you get caught, then you're out of luck. So this is also why I do it on HIMS. I do it on SoFi, and I was doing it on Tesla for the longest time. And even for UNH, like, I want to get into it as a trade. I'm sizing accordingly. So keep this in mind. This is like rule number 1 for option selling. And yes, I'm going to get some pizza right after this. So this is going to be great. Thank you so much, Brock Capital. Appreciate you.
Yeah, I unless there's other questions that are pressing, I do see some others. We've gone pretty long, guys, and Tevis is
plenty of questions.
Waving. Do you want to do some more questions? Okay,
let's do like 5 more minutes max 5 minutes, and let's rapid fire. Yeah,
the Palantir ones.
Thoughts on BBAI? No thoughts.
So I don't know.
You have thoughts?
Yeah, they're using Palantir, by the way, for FedStart. So Palantir actually gets revenue from their competitors, which is pretty cool. They're not a 1-for-1 comparison, but there's going to be multiple winners in the AI space. Don't think Palantir is going to win it all.
Roy, you want to start a Palantir weekly show?
That should exist. Somebody should do that.
Yeah, that's weird, right? Any corrections in the next 3 months?
Correction is a 10% down on the S&P 500. No, probably not. I pull back, yes, 5-7%.
Yeah, I agree with the pullback, not a correction. If we do get a pullback, I think August or September is probably where we're going to get one, but September is a little bit padded with the rate cuts that the market is expecting. But if in fact Jay Powell says F you to Trump and doesn't cut rates, then we're definitely getting a pullback.
Yeah, pullback's likely, I think.
Palantir or UNH, better stock price return over the next 3 years. Roy, you have to pick one.
Palantir, easy.
And there you have it. Do you think I'm not going to answer that same question. Do you think the high flying crypto? Yeah, go ahead.
Oh, sorry. I thought you were going to say you're not answering this one. Go ahead. You do it first.
High flying crypto plays like Circle, Bull, SBET are done for a long while. I think they're going to be tethered to some degree to the cyclicality and the seasonality of crypto. But again, I think when the market is in risk on territory, you'll get Open Door doing like a 5x in a single day, and nobody will really bat an eye. And we are still very much in risk on territory. So I wouldn't be surprised if they go higher before they go lower, quite frankly.
Yeah. Bull's a little different for me. I just don't know about the management. I think it's a decent company, but it's not a pure crypto play. So I think there's upside there. Circle should be trading about $90 a share for me. So it might be done for a little while. Just invest in coin, I think, frankly, if you're looking at USDC. But that one might be done for a little bit. I think people realize, like, okay, Circle's not going to take over the entire economy. It's not. And that's a commodity. It is. Not everything that Circle does is a commodity, but commodities tend to lose margin and pricing power over time. SBET, an Ethereum play, Ethereum's not done. There's a lot of upside there. I'm not in it, but I am in Ethereum.
New earnings thoughts. I think earnings will be
I don't know. I actually trimmed a little bit off of new. Partly, actually, it's for the same reason as SoFi, although it's gone the opposite direction. I had a lot of fintech, and I'm like, let me trim something that I'm less confident in. Realized losses. Like I still have leaps. I still have vertical spreads. I still have shares. On this earnings, like they'll have fewer headwinds from the Brazilian real to the US dollar. So that's good. They're not going to have that massive down spike as a result. But there are real geopolitical headwinds there. That was the bear case and the bear thesis. It's inevitable in Brazil almost. They'll survive it. They'll be fine. This earnings, I am not confident in at all. Could we see new under $10 a share after this earnings? We could. Could we see them at 15? We could. This is going to be a lot more volatile than previous earnings.
If you have to hold account, Joby or Open Door, neither. I would shoot myself.
Joby has really good engineering. The trying to scale that type of the business, that's where I'm questionable, not the actual technology. Open, the idea is great, and somebody in the future, kind of like with Teladoc and HIMSS, although those are a little bit different, will come along, make that business model work, and it's genius. The problem with Open Door is they have trash leadership and management, just absolutely horrendous, and that business needs to go away. And actually, the quality was terrible too. Like everything was wrong in the way that was executed. An idea is not enough, guys.
This is actually a great question. I'd love to hear your answer on this. At what net worth do you say I made it?
You're familiar with the rule of 4? We're at 4%.
Yeah, 4%.
So when I can actually live off of 4% of whatever my actual assets are, as far as stocks and everything. So that's when I'll feel like I made it.
Is that your current day expenses, like your expenses that you have today, when that number is 4%?
At the time. So like if 5 years from now, 4% of my portfolio that I have access to, I'm going to include the retirement stuff, even though I'm not at the age where I can draw on it tax-free. But I'm just saying that's when I'll feel like I've made it. If my expenses, 5 years out, freaking inflation, are $100,000 a year, I hope not. I don't think that 4% of my no, I don't think. Well, I don't know. We're in a bull market. We'll see. I hold Palantir, so who knows? And SoFi to the moon, right? But if at that point 4% of my portfolio would cover my living expenses that year, that's when I'll feel like I've made it.
I think the number is much lower than people would think initially. I think you can get by and live a very comfortable life with, like mid to low single digit millions. And that's not like it's so out of reach, man. Like you have a couple of Palantirs in your portfolio and you're there. So I think that, yeah, I'm not going to say any number because I don't necessarily have it like calculated to that degree. I know the 4%, and I'm like, I could probably eke out 4% and live right now, but probably not in Toronto.
Yeah. So the 100,000 amount that I mentioned, that's $2.5 million. Will my portfolio be 2.5 million in 5 years? Probably not. I'd love it, but yeah, not likely. I'm not a millionaire as far as investments in stocks yet. So I'm smaller than Tevis, who's a billionaire. So
anyways, okay, next question. Are you buying Amazon shares, not options for the long term? Yes, I am buying Amazon actively.
I'm not. I don't think it's bad. I just, NVIDIA, all-time highs NVIDIA. I don't care. Give me that for the Max 7.
All due respect, you guys are wrong about UNH. It's going to be the best value buy in years. They will up the premiums and get back to things.
You're wrong, Tevis, even though you're bullish in buying.
I am bullish in buying.
I'm wrong. And I may be. I don't know that business well. I probably spent like 2 hours total looking at it, which is not enough, especially in a sector I don't understand very well at all. So I could well be wrong. Absolutely.
Yeah. Toronto is the ghetto. I don't know how that snuck in there, right? That's strange. That's not a question. That's a very true statement. What are the criteria? Yeah, I know I asked this already. SoFi price target, end of year. I think all-time high is over $28.
28.
There you go. Thoughts on Pfizer crushing earnings? Dude, Pfizer? Ask Steve Fiorella for that shit.
They are one of those dividend beneficiary plays too. So it's I don't have any thoughts. I haven't looked at it, so I'm not going to tell you something I'm not that familiar with because I haven't looked at this earnings. So
average up on Hood here, yes.
If it wasn't my largest position, yes, it is. And again, I'm overweight on fintech, so no. If I had only like 5% of my portfolio in Robinhood, yes. DCA though, it'd be like Palantir, 5-10 shares a week.
Thoughts on Reddit? Is it a buy on any pullback? I haven't looked at their financials.
Reddit's interesting to me. I kind of wrote it off when they IPO'd. I don't think I want to be too long in here. There's a immense value from LLMs and against LLMs as well in AI for Reddit that I underappreciated, plus advertising, having real human eyeballs there. I think it might be a buy on a pullback. I don't know. But again, I don't like social media, so I don't think I'd buy it. But maybe. Like, I don't hate Reddit. I thank you for that. That's an interesting idea. I'm going to have to. I thought about it like last week and I kind of forgot about it. So let me write that down.
All right. And that's our show.
Wrote it down. So.
And that's our show, everybody. Thank you so much for watching. YouTube is social media. Yes, it is. Good observation, KZ. You're killing it today.
But when Tevis is on it can't be that bad.
It's you know what else is social media? TikTok. Follow me on there for the dances. Thank you so much for watching, and we will see you next week for the Btlg Weekly, where hopefully it's not a 2-hour show, but most of them end up being 2 hours. I don't hate you. I love you. And man, that was exhausting.
Bye, guys.
End stream.